As the U.S. economy slows down, the real estate market might be heating up. Real estate expert Rick Sadle with Keller Williams Realty and SadleRealEstate.com is with us. Rick, good morning.
Hey, good morning.
So every other day we have econ reports. Let's talk about mortgage rates and interest rates. The Fed, we understand, we believe, is likely going to lower interest rates at their next meeting in September, but mortgage rates can react a lot quicker, we understand. Can you explain that?
Well, I mean, you talked about econ headlines. Yeah, as we all know, if anyone's been following the headlines, inflation is cooling. And with the latest jobs reports, there's a lot of speculation the Fed's going to lower that federal funds rate, right? Now, the Fed doesn't actually control mortgage rates, just the federal funds rate. But those two rates tend to correspond. In other words, they tend to go in the same direction. Well, as you said, everyone is expecting that Fed rate cut in September, and that's because everyone hears the Fed chair's speeches. And oftentimes the Fed chair sprinkles hints in their speeches and their comments as to what's going to happen. The Fed likes to let investors know what their intentions are. Well, when that happens, mortgage rates tend to drift in the same direction that the Fed is going to go. As a matter of fact, sometimes the mortgage rates even kind of bake in that Fed rate cut even before the Fed lowers the federal funds rate. It's just a market to the reaction to the Fed's intentions.
That's fascinating. As a real estate professional working with clients and mortgage lenders, Rick, is this a daily balancing act?
Yeah, totally. Especially right now, as the markets and also the buyers are hyper focused on mortgage rates, right? With affordability being such a challenge, just a 0.25% interest rate cut can make the difference in whether someone can afford a home or not, right? So we're constantly in contact with the mortgage lenders to check on rates and what the buyer can afford based on today's rates and based on what the Fed said today or what inflation numbers came in or what jobs reports said. Like all that economic news plays a part in our daily discussions.
Along those lines, you talk to a lot of people who I'm sure try to hit that market right. They're waiting for mortgage rates or interest rates in this case to come down. Can you talk about that strategy and how it could backfire possibly?
Yeah, I mean, for the last, I don't know, 2.5 years, we had a lot of people who've said they're waiting for the rates to come down, right? And I can understand that. It's all about affordability, like we said. The problem is when the rates do come down, it's going to create a lot more demand. A lot more buyers are going to jump back into the market. And when that happens, prices are going to go up again. So I'm not really sure it's worth trying to time it. There are some strategies to take advantage of both, right? You can pay today's prices, but enjoy affordability of the lower interest rates. So I think, as I've always said, probably the best time to buy is when life circumstances dictate, not when you think the market's perfect or when you think the timing is exactly right.
So noted. Yeah, when in doubt, think long term and act when you're ready. Great stuff on those rates. Rick, thanks again.
Yeah, thanks.
That is Rick Sadle, real estate expert with Keller Williams Realty and SadleRealEstate.com.